Richard Perry. He's an analyst at Hantec Markets in London. Great to have you back with us, Richard. Now, tell us more about the rally we've seen on Chinese markets and the flow-on effect that it's had on other markets around the world.
Yes, as you say, the media reports over the weekend in China have really created a surge in trading account requests by the Chinese population. So that really has helped to generate the largest one-day volume on the Shanghai Composite for 5 years since that 2015 massive bull rally. Now, this has now flowed into other markets as well. Really has been one of the main reasons why risk appetite has been so positive around global markets today. You've seen equities in the European space 1.5% higher. You've got the increase in Wall Street futures as well. But that's not also confined to equities. You're seeing currencies which are benefiting from that. The Australian dollar is very much tied to the Chinese growth story, and that is also one of the best performing currency majors today. So it really is coming throughout markets today.
Now, some analysts have compared the surge that we're seeing on Chinese market to that historic bull run that we saw in 2014 and 2015, which, as we know, ended in tears in quite a significant crash. Are you worried that perhaps we're seeing signs of what happened back then?
Yes, and what you saw in 2015 was that equities in China rallied probably around about 65% in the course of maybe 4 months. But the next month after that, it pretty much gave all of that back. And then 2 months later, it had all been gone entirely. So we do see similarities with the bull move that we've got at the moment. You had surging volume back in 2015, similar surging volume back now. So this is the concern that you have, because retail traders do get really tempted. They see markets accelerating higher. They push the button to buy their stocks, and they think it's all good and all rosy in the garden. But ultimately, bull markets are not driven through that. They actually the origins of bull markets are a lot earlier than that, and the retail trade tends to be the last ones in. Now, that is a real concern for me, the fact that we've had such a strong rally in these Chinese equities in the last few days. Exponential runs higher tend to come with sharp retracements, and that would be my fear in the coming days.
Now, traders in the US are returning from the 4th of July holiday. What do you expect from Wall Street this week? Are they going to build on the momentum we saw in the previous week?
Well, we did see equities in Wall Street moving higher throughout last week, but it was interesting to see that the momentum of the move higher was starting to dissipate into that non-farm payrolls report, and actually started to show signs of a little bit of caution actually in the wake of the payrolls report last Thursday. Obviously, we had the public holiday on Friday. Now, we've seen that the initial moves this week have been benefiting from that Chinese story. So we've got an uptick of around about 1.5% today on US markets, but it'll be interesting to see how much further US bull run can go, really, because I think we're going to start to see the Q3 story developing into a data story, in the fact that we're going to start to see the rising infection rates hitting the US data negatively in July and August, and that could start to weigh on those equity markets in the coming weeks. But for today, ISM non-manufacturing services is the key, and that could still see the sentiment pulling higher, but maybe not for long.
Okay, Richard Perry from Hantec Markets in London, thank you as always for your analysis.